Hey everybody, what's up? It's Pete. We're creating a game plan for Thursday, April 16th, 2020. We got pretty much what we expected out of the market today. The financials did not report good earnings again, so it's not a second day in a row. JP Morgan traded lower again. Bank of America, Goldman, neither one had good earnings. A lot of people say that as the financials go, the market goes, but obviously there's a lot more happening overall right now. From a day trading perspective, very boring day, except for a couple of opportunities that I actually missed today. I had a little bit of a bias to the short side today as a short-term trade, not as a longer term. I want to make that clear. And next slide I'm going to show you, I'm actually going to really drill that point home. And I get a lot of questions about the differences between order flow and momentum and why I spend so much time focusing on find the dominant perspective in the market. Then you're dropping down to find a spot to manage risk back in the direction of that higher time frame. So I'm gonna talk a little bit about a trade that I missed today that I was kind of pissed off I missed, and I actually mentioned it in the Slack channel this morning. I literally said this kind of price action, a gap lower in a bullish environment, especially for a stock that's really strong, is typically a buy. But because I was focused on shorting the financials, which kind of absolutely went nowhere from a day trading perspective, I missed out on a good trade in a tech stock today. So we all, it happens to everybody. Nobody's perfect, right? Anyway, we had Netflix continue to fly through the roof today. I actually do not like Netflix initiating for a new long tomorrow. I think if it opens higher and pushes higher tomorrow, so in other words, it is here and then pushes higher. I actually believe that tomorrow's profit taking, an area for profit taking, especially we'll take a look at the chart real quick. It's actually heading into resistance way back to 2018. Could it blast through that resistance? Absolutely. And it's really not so much about the resistance level, although that's a part of it. It's really more about the fact that it's rallied $70 in 3 days. That's a big move, right? For that stock, it's a big move. Not talking about Amazon, Netflix, that's a big stock. So we're going to hop right over to the charts. We're going to get into it. Thank you so much for everybody who posts ideas for us to take a look at, because it's really fun for me to see what you're thinking and come back and have a little bit of a dialogue in the comments. So that's really cool for me. If you find the channel helpful, it would mean the world to me. I'd really appreciate if you click down and click subscribe. So let's go straight over to the charts. But first thing I want to point out, which I think this does a really good job of drilling home, thinking from a big picture perspective. So if you're just looking at the market today, this is a heat map of the S&P 500. And again, you can see the little pockets of opportunity. United Health, which also had earnings today. Amazon has been positive. Netflix, we just talked about. But again, we highlighted this section here, the financials. But here's where a lot of people drop the ball. They spend too much time watching every single tick, too much time watching every single news channel, reading every single headline. So you can see this is the one-day performance of the S&P 500. To put it in a little bit more perspective, here's the last week, which is the last 5 trading days. So still a little bit of pockets here and there, right? But look what we have for the last month. Picture changes dramatically where now it's bright. It's actually neon green, right? So here's the question. The question is, how do you go into the day with this much buying pressure over the last month? And look at the percentages of some of these moves. It's just ridiculous. There's 2 different schools of thought here right now. And I'm going to come back to the screen really quick because I want to keep it on the charts. Have stocks moved too far too fast? I guess too far too fast is relative. Do you trade against those moves? Meaning, do you feel they've moved too far, and do you exit your buys that you might have had from, let's say the last 10 days, just for argument's sake, or do you initiate new short sales? Well, there's something I want you to write down, which is very important, something that I did not know, or maybe I did know it, and I just didn't pay attention to it. Exiting a long. So in other words, you bought it here and sold here. Exiting a long is not a sell short. So in other words, the stock that you just loved, you built this gigantic argument for, and you said, I think it's going up. It actually does go up. Gets to a point where you feel like you could book a profit. I call that a saturation point, where the buying pressure just saturates itself and it's exhausted, kind of like a rubber band stretched as far as you can. But again, I actually got asked a question, why do I use the terminology order flow? Why do I use the terminology smart money? And really, the market is the smart money. The market tells us exactly what to do. Now, within that, there are large players like hedge funds and banks and institutions, all that kind of stuff. And that could be inferred to be the smart money. That could be inferred to be the order flow, right? But really, the order flow and the smart money, the order flows are the actual orders. Like you can visualize, that's one of the biggest things that I teach is I want you to don't just say trend. Saying trend is like, yeah, whatever. I'm looking at the moving averages and it's trending. But if you really dig into the charts and like I talk about a lot, like looking into the candlesticks, it might be going up, but 3 out of 5 days it closed below the open. So you can imagine like real orders were causing selling despite the fact that it was going up. So there's a reason for that. So the point that I want to make here is that let's say you're long a bunch of stocks and tomorrow we have a push higher and your stock is now up 40%. What a face I just made. 40%. Like Microsoft here, 27% in the last month. Amazon, 36% in the last month. And you decide you want to get out. Let's say it was a short-term swing trade, not a position trade, not a between one earnings report and the next type of trade. That doesn't mean now you trade it back in the other direction. That's one of the dumbest things I did early in my career. And as soon as you stop making those silly mistakes, those unforced errors, like they call in tennis, you immediately start to grow your account because now you're not giving back profits on those trades that you put on just because you want it to be active. So I think that's a really important thing to be considering now heading into the market. We did trade lower. We did trade sideways. We said going into today that we expected a choppy, trendless day, and unfortunately we got it. We did not really bounce in the stocks that opened lower that were a little bit weaker, the earnings stocks specifically. So what do we do tomorrow, right? That's the big thing. What do we do tomorrow? For stocks that have been super strong, as long as they remain well bid on their weekly candlesticks and above the open for this week, you can continue. I would continue to hold them long. I don't want to tell anybody what to do because I don't know. Obviously, we don't know each other. Those are the situations where you would continue to hold those long. However, we're gonna go back to the charts and we're gonna take a look at what's actually going on as far as the SPY and the weekly and where we're setting up there. So if you remember coming into the day, yesterday, actually, we were talking about the weekly candlestick. Yesterday's candle was a big green and now we've actually gapped lower and the opening price for the SPY this week is 277.14. So that is the line in the sand for tomorrow's price action for this now to start being considered a bearish U-turn. That's right, a fancy term that I made where essentially it trades above the previous candle after momentum. That's the big thing. If it's going sideways, it doesn't matter. But you can see we have plenty of momentum here. We trade above the previous candle, reverse and U-turn back into the previous candle, trade below that low, and then ultimately are below to this candle's opening price. So essentially, it's a red candle that traded above the previous high and reversed. If we trade below that 277.14 in the SPY, we're going to have a bearish U-turn, which is typically a reversal signal from the momentum. So the best trades at that point would ultimately be stocks that were already in bearish opportunities, which ironically right now is super hard to find. I can't believe, like scanning hundreds and hundreds of stocks, all the filters you can think of, there aren't really that many good bearish opportunities where you just look at it and say, man, that's really in a solid downtrend. I could see where the order flow is lined up perfectly, and I could see clearly where the profit potential is. So many of the stocks that are bearish setups right now that meet the criteria are in trading ranges, which doesn't make them great opportunities. They're kind of stuck, and I usually say when it's in a window like that, that's the right price. It's got to get out of that window. A lot of the airline stocks, which are clearly in the news right now, a lot of the the cruise lines, they're in a box right now. So what we're going to focus on today and the game planning for heading into tomorrow, again, you can see we're kind of in a box here in the SPY, despite the fact that we do have a solid uptrend. But here's what's starting to concern me. Look at these indecision candles. 1, 2, 3, 4 candles in a row. So last Friday, which obviously was a shortened day, but these 3 candles, small body candlesticks. That's indecision. And the reason I call it indecision is because it opened and closed within the same area on that particular window. So we have indecision candlesticks on the daily chart, and we have a potential bearish U-turn on the weekly chart, despite the fact that it's still well bid. So now we have a mixture of what we call multiple time frame analysis, where it's not lining up perfectly. So basically what I'm saying is tomorrow the better trades are still long because the weekly charts are still well bid, but they're not as good unless we're still above the weekly opens on whatever stock you happen to be watching. So we actually had a good conversation in one of the coaching calls today about what's the sequence? What's the sequence and what do I look at first? Do I look at the market or do I look at the stocks? And I always look at the market first. Now, here's the key. I'm always trading my stocks, but I'm looking at the market to see if more money is doing the same thing. So if the market's obvious, I can be a little bit more aggressive in my stock because more money's flowing in the same direction. Again, order flowing in the same direction. If the market's choppy, which is kind of what we're seeing in that last 4-day window, right? Choppy on the daily candlestick, so I'm going to lower my exposure a little bit, book profits a little bit sooner, unless we break out and go well bid again and trade above the weekly opening, that's where we're on now, but we're kind of hanging on by a thread. So some of the stocks that were bullish heading into today, Amazon very extended. You can see here now it's 1, 2, 3, 4 weeks in a row with a expansion in volatility. I would not be looking to get long Amazon for a new position. Again, I'm looking at the weekly candlesticks. I'd be looking for those types of stocks, and Netflix fits in that category as well, obviously. I'd be looking for them to expand, exhaust, and then kind of go sideways. The next trade that I'm looking for in Netflix, obviously, is not a short sale, despite the fact that we are coming up to this resistance. We're kind of there already, and you can see we kind of failed up there again. I'd be looking for some place to bid between 390 and 385, looking for another move to the upside. So again, getting into some of these stocks, you can see some of them have inside candlesticks 2 weeks. This would imply that Tesla has a little more room. It's only 2 candlesticks on the weekly chart. But I don't want to get into too many of the weekly charts. I just want to set you guys in motion, and then you can take a look on your own. But as far as stocks on the other side of the equation, obviously we had JP Morgan. I'm looking to short this again tomorrow. It's technically still an inside candlestick, but it can instantly make new 2-week lows here tomorrow with a lower, we'll push to the downside. ExxonMobil, a bear flag on the weekly chart, right? Everybody knows what that looks like. And now inside week again, but again, this could actually end up going well offered tomorrow. So I like that one on the short side as well. An interesting one that I believe we drew on the weekly chart. If it wasn't Caterpillar, it was Boeing actually. Boeing just keeps consolidating. What's interesting here is whenever it jumbles up into a price action like this, traditional technical analysis, it's a pennant or a wedge. I think it's a pennant. Terminology doesn't make a difference. What matters is it's consolidating, ready for an expansion in volatility again. This is even better than an inside candlestick. It's happening over a few weeks. What I thought was super interesting here is it actually broke down but closed above the open and had a positive day on a day that the market was super bearish. So that's something to keep an eye on tomorrow, despite the fact that we have this and all the bad news. Price action right now reversed. So if we trade back above tomorrow's open, which it's trading a little bit lower now, if we trade above tomorrow's opening, that could be interesting. We might get a short covering rally outside of that, but I'm not going to guess. Let's let the market tip its hand and then tell us what it wants to do. So some interesting trades. I want to cover some of them because they could be traps for you to buy at the wrong time. Peloton actually had a inside candlestick. 1, 2, 3, 4 well-bid candlesticks are now coming into resistance. If Peloton opens flat and pushes higher tomorrow, that'd be a stock that I'd be looking to take profits on, not initiate a new long. mRNA has been driving quite a few traders crazy. Actually had some nice price action again, took out 20-day highs. This stock seems to fail every time it takes out a new high. So if this opens higher, pushes higher, and if you had a long position from down here, this breakout, I'd be looking to be booking profits into this as well, especially if the market's negative. If it's a day trade, it's a little different story. You can day trade it to your heart's content because you're not carrying that overnight risk. ZS, actually not a stock I normally trade, but met the criteria. I actually like this. It broke above 66 yesterday and then stayed there and went well bid, which that's exactly what we want to see. We don't want to see an inside candlestick like we saw here pretty much, right? A little bit outside, but pretty much you get the idea. It didn't go well bid and close on the highs like this one did. I'm looking for follow through here again. What do we have next? We have UNH, which actually had earnings as well and finished bullish. I'm looking for this to test resistance, pause, and then look for another rally up to 305-ish. So you can see over here, it's got this mess of price action over here. And you can actually, during the day, you'll see how it hit and hit hard. It got up to that level and reversed. It came right back in. So that'll tell you how strong that resistance level is up there on the daily chart. I think Jerry called that out this morning. I actually happened to miss that because I was focused mostly over here. And then they got some more resistance up here as well. And that's a big part of community too. We help each other out. We're looking at the same thing. ATVI, Activision, also breaking out and having a bullish engulfing candle, which this is a pretty interesting one because we traded through the previous day's low and completely reversed and took out, I don't know, is it 52? Yeah, 52-week highs as well. So this stock has some room to go. As long as it's trading above yesterday's high, that's where my buy stop to enter would end up being, up in that area. Netflix, we just discussed. I don't like a new entry for a swing trade in Netflix long. I do like day trading the stock as long as it stays above the open price. Be very careful if Netflix opens flat tomorrow, pushes towards tomorrow's high and fails. That's generally going to be profit taking as well. But really nice job from everybody who's sending emails about trailing this thing up the last few days. I love to see that when a plan is executed. That's really what makes the difference between a struggling trader and somebody who gets paid. JD, I actually got a couple emails about JD. I don't like it long, even though it meets the criteria. It took out new 20 days highs, got up to this level, 44 basically, and it keeps failing, and we pushed up and pulled all the way back in again. I would not be looking to get long the stock. As a matter of fact, between you and I, look at all these melted candles. Now that we're training your eye to take a look at it, there's no consistency from day to day where there's none of this on a regular basis. This is where we make money on a day-to-day, week-to-week basis. These will drive you batty. Get it, batty? So I wouldn't even be trading the stock, but it did meet the criteria. Last, we have EA on the long side. This is another one. This is more one that's going into the tracking journal, but not a trade for tomorrow. We got up to this level, and we're pausing now above 112. So you can see, got up to 112, came in, couldn't get through 112, got to 112, pulled back, got through there again. 110, not 112. And now we're up at resistance again. I personally would not be trading this up into these resistance levels. I would rather see it get above this 114 level and pause and put that in the tracking journal and look for that maybe early next week if the market remains bullish. Got some nice follow through on AMD again today. So we traded through the highs and paused. When I say nice follow through, I want to be clear. Nice follow through on the bullish side on a day the market got shellacked. So keep that in mind. That should be one of the first scans that you run. Which stocks were positive from the open on a day that the stock market was negative. So in the short term, those are great stocks to keep a look at tomorrow, provided they meet the order flow and momentum criteria, which this does. So technically, this gapped, had a bullish gap, and now paused on a day the market was weak. So we're still looking for this to make a run up to that 58 level. So again, very good job of calling that one out. We called out Lilly a couple of days ago, looking for it to get above 147.50. Finally did. Pushed through, had a positive day on a day the market was weak again. I'm a little bit more inclined to think this is going to pause up in this area as well. If it gets above today and Tuesday's price action and stays there, you can get away with having a buy stop here above that level, which is basically the close for 2 days in a row. So buy stop 151.18 is where it closed. Personally, I'd have it around the 151.50 level. I'd want it to get up to above where it is now to trigger a new trade as opposed to just getting long a new swing trade. Apple, actually, an interesting one as well. I know a lot of people day trade this stock. Gap trading into an inside day, closing above the open. So not so much a as negative day as the fact that it closed down 260. The fact that it closed above the open on such a negative day in the market and traded into an inside day. I like Apple long right now, looking for a run at that 302.50 level. If it breaks out of the inside day to the upside and it's a new position, I would initiate it outside of the 2-day trading range. If it breaks down, personally, I'd let it go. I don't want to fight this right now. Microsoft has been one that I'm getting a lot of comments and emails about too. Almost exactly the same trade as Apple, except this one has a little bit more clear resistance here at the 172.50 level. So to me, it needs to get above 175 before I'm looking at it, because there's no room. There's really no room between where we are now and the resistance. I want it to get above that resistance, similar to what we've been looking at in Netflix, and also one that Wade called out, which was NEM. Excuse me, not AEM. NEM, and actually has a swing high. So for those of you who don't know the terminology, a swing high is a reversal pattern. So what I'm actually looking for this is for one more day to the downside and then look for a move to the upside. So again, that'll be another one for the tracking journal. As far as a couple of sell shorts that I do like for tomorrow, if we happen to break, WBA looking for a sell short. Again, this is the problem with looking at sell shorts right now. It had a really big down day. It's now well offered, and you can make a case for a profit target down to 40 for maybe a one-day trade. But again, it hasn't really done anything in a month. So I pulled this one up to show you that it's not even a great opportunity on the short side. So what's going to end up happening, and we'll look at JP Morgan as the last short sale here as well. JP Morgan went inside candlestick, well offered to a gap down. Even if I like this to the short side, this is really more a trade-off of earnings continuation being bad than the order flow. There's no order flow. Garbage momentum, really. It's not flowing back and forth. It's an earnings momentum play off of bad earnings than it is off the chart. So I want to make it clear, switching strategies to a different play. So here's what's going to end up happening. I want to mention one more stock because it came up interesting in my game planning. Doesn't look like a whole lot here, right? Dick's Sporting Goods. We had a push up, a pause, a push up, and a pause. In that sense, I do like it. But here's where it gets a little bit interesting. Look at the volume. A little different there, right? Now you're reading the tape. So what's going on? Look at this spike in volume. Look at this spike in volume, spike in volume, spike in volume. We're looking at a little bit of accumulation here in DKS, and that usually turns stuff around. So keep an eye on that. Have it in your tracking journal. Tomorrow we know our level in the SPY. Does the week go negative tomorrow? If it does, and we have a negative day, if you're a day trader, it could be a little bit tough because you're going to have all these stocks that have bullish order flow and bullish momentum, but they're a negative day. Do you trade them short or do you let them go? I will generally let them go looking for a spot to bid because I only like to buy stocks that I would trade longer term as well, whether they're a day trade or a swing trade or a position trade. I like to feel like I want to be long the stock no matter what, and then it's just a question of what time frame. So the short side could be a little bit tough. We would need to see the market to go well offered and maybe the VIX spike a little bit. So the short term, I'm still looking long, cautiously waiting to see where we trade from the weekly because we're technically still well bid on the weekly charts, but we might go negative on the candlestick tomorrow. So really important line in the sand to read the tape. So be disciplined, be safe, and let's make some money tomorrow. Have a great night, everybody.